All right, so there you go. We're recording. So Marlene, we're so grateful to have you on here today with us today and sharing your expertise with us. So take it away.
Well, thank you. It's my pleasure to help. I've been doing in the tax industry for over 20 years, and I do personal taxes, I do business taxes, I do corporations and trusts and partnerships, and do bookkeeping as well. So I run the gamut. But
That's a
taxes are
lot.
so
Wow.
important.
I'm sorry. So I got your resume from Kaylee. She told me at least 15 years. So that's what I went with.
Well, that's probably what she remembers.
Yeah, but no, that's good. You're very well versed.
So taxes are very important, and especially for the industry of MLMs. Um, there are certain things that can be deducted, certain things that cannot be deducted. Um, for most people, your return, the business part of the return, can be done right with your personal 1040. It does not require a whole separate return, um, but there's things you can and cannot deduct. So when you're talking about your business, you include not only the income you get from doTERRA, but the income you get from sharing oils with people if you sell them. But you need to make sure you deduct the right things. So you cannot ever deduct your monthly order. So if you're doing an LRP, that's not deductible every month. That's your personal use, and that is never deductible. But if you're purchasing a product for the very first time, that is deductible. So when we go to convention and we get all those new products and we buy that convention kit, that can be deductible because it's all new stuff, right? We have to be able to touch it and smell it and use it and know how it works and what it does and how it smells, and so that we can better share it with other people. But if you're buying multiples of the same product, you cannot deduct that. When you purchase things from suppliers like Aroma Tools or Green Airs, you get your diffusers, those kinds of things, those are deductible. That's common practice for businesses. Um, you do not need, the federal guidelines do not require a state or local business license. They don't particularly care if you have one. They're more interested in what income you have. It's typical for new businesses to have a loss. Of course, that's not our intent. Intent is a big word. Our intent is to grow in our business and have a great profit that we can help support our family with. But there are times, especially at the beginning, where you may have more expenses than income, and that's okay. That's not going to necessarily trigger you for an audit or have the IRS poking around. But what we want to see as a trend is that the expenses start to drop down a little bit and the income crosses over and is higher so that you are showing a profit. But the most important thing is to keep all of your receipts, keep everything. And if keeping records is not your strength, then put them in like kind envelopes or put them in file folders, whatever, however you think, just get them put away. If you purchase something for your business and it's on a receipt that is that filmy receipt, like you can from like Fred Meyer or Costco, or where the receipt fades, you need to make a copy of that receipt and staple the receipt to that piece of paper. And if you are ever audited, the IRS will take that copied receipt because IRS only wants originals. However, they couldn't change that part of the industry. So they will accept a copy of the receipt as long as it's attached, if it's the filmy kind that fades away. One of the
Oh
other
yeah,
tricky
so are
ones,
those the ones, you mean the ones that are like heat activated?
yeah, the ones, because they fade after a year or so, or if you
Yeah,
use a yellow highlighter, it makes it fade even faster. So
yeah.
those ones, because they fade so fast and IRS couldn't change the industry, that is one of
So
the only
those are
ones
the
they
ones you
will
can
allow a copy.
photocopy.
Yes, but make sure it's stapled to the piece of paper.
Interesting.
Yeah, when it comes to mileage, you need to keep an accurate mileage log. So you need to keep it in your car or an app on your phone that you can download and print out. So that's if you have an office and home, then you can deduct the mileage from your home to your destination. If you do not have an office and home, meaning you don't have a dedicated space that is strictly for your business, then leave your home, stop and get a coffee or stop at the post office or whatever, and then go to your destination, and that mileage is deductible between there. But you have to keep track. So if you are doing a class at Mrs. Smith's house, then you need to deduct the class, Mrs. Smith, the date, and then 7 miles away. So keep track of your mileage. This all takes discipline to keep track of all this stuff, but if you want to run a good business, you need to have all your receipts. The other one is eating meals out. This is a big deal because people think they can deduct every time they go out and they don't even talk about business. That is not true. So if you take someone out that you want to share the oils with, or you're doing a one-on-one and you purchase them a coffee at your local coffee shop, what you want to do on the receipt is make sure you write who you're with and what you talked about, and then keep that receipt. And if you have a bunch of little receipts and you're worried about losing them, tape them to a regular piece of paper, like a copy paper. If you tape them on there, then you won't lose them, and they're right there handy if you ever do need them. But it's a big deal. You need to write what you're doing on the receipt for the meal, or if you go out to eat with your upline or whatever you're doing, just make sure you write on the receipt what you're doing. If you're traveling to convention, keep track of all your receipts and just put travel and the convention, or what traveling for leadership or whatever you're doing, put the label, write it on the top of or on the back of the receipt so you know what you were doing with that, so that you can deduct it. Very important. The key thing with everything is just keeping your receipts. Put them into QuickBooks or Quicken or whatever you're comfortable with. QuickBooks is the one program that I use the most because it's the easiest to put in. Even if you only put it in the check register part, because you can still print out a report at the end of the year that gives you a profit and loss that's easy to read, that you can do your taxes with. If you want to go to a professional, especially the first couple of years you're doing taxes, that's great. Make sure you ask for a senior tax preparer. That way you know that you're going to get somebody who has some knowledge behind them, and can help you navigate, not only navigate your tax return, but be able to teach you about what things you can look forward to deduct. Because as you start making profits with your business, which is obviously your intent, there are ways where you can use that profit in like a self-employment retirement program, where you can put more money into working for you, but not paying taxes on it right now, and not having the government use your money. So there's different things that you can do as you get a bigger and bigger profit. Is there any questions so far?
I have a few, Marlene. Do you mind if I jump in here and ask?
Sure. Mm-hmm.
Okay, so I'd heard as far as claiming a loss, is there a time limit on that? Like, can you only claim a loss on your business? Is it for the first 3 years, and then you need to either show an intent to or earn money, or how does that all work?
Well, that's a great question, because there's kind of a guideline we look at 3 to 5 years. We want you to be able to start really showing a profit in your business because it's your intent. But sometimes what we're looking at is maybe the first year you took $1,000 loss and only had maybe $2,000 of income. But by the third year, you're making $10,000 of income, and you might still have a loss, maybe not as much or maybe a little bit more, but we're seeing a trend of that income going up.
Okay, so as long as it's showing something.
That your intent is, and you're doing the right thing. So, whether we don't have so much in advertising in this industry, but there are certain markers on the tax return where we're watching the money as the trend is that you're wanting to make a profit, and you're pushing that boulder up a hill, just like when we're building our business. So those are things that the IRS is looking at. There is no firm hard number.
Okay.
But if you are intentionally creating a loss to lower your regular taxable income, the IRS will look at that and make you convert it to a hobby. And what that means is you have to take the income on the front page of your tax return on a 1040, would be like line 21, but your expenses would only be able to be deductible on a Schedule A.
Okay.
So those are things you have to look for. But if
Yeah.
you are truly working the business, it's going to show in your, not only your income, but in your some of your expenses.
Yeah,
So that's
that makes
that's a great question.
Yeah, that makes
Yeah.
sense. So, and then my other question was, so at what point do people need to start like filing a Schedule C or like?
The minute you start making money with any business, you need to start filing a Schedule C. So, but Schedule C, which is your personal business, until you make $400 or more, there's no tax liability to it. So if you made $300 this year, there's not going to be a tax liability to that income. But once you're at 400 or more, you're going to have to start paying self-employment taxes.
Okay, I thought it was 600, so that's good to know.
600 is where the companies or people are required to send out a 1099 to you if it's $600 or more in earnings.
Oh.
But 400 is IRS.
Okay. Okay, that's good to know.
So one of the things with self-employment income is when you pay self-employment income tax, that tax is separate from your income tax. So your income tax is figured out on your total income, but your self-employment tax is added to your income tax. And the reason that is when you work for a job and you're given a wage, you pay half of your Social Security and half of your Medicare tax, and the employer pays the other half. When you are self-employed, you pay both halves.
Yeah, it's not so fair.
Half of it, yeah, but half of it does get deducted on the front of your 1040 as an adjustment to income, so it lowers your income.
Right.
But you do have to pay both sides, and think of it in the way of, God forbid, if you ever need to use Social Security, or if by the off chance it's still there when you retire, then you've put money into it and you have something to collect.
That's so true.
So for yourself or your family. So, but people think that it's all included in income tax, but your self-employment tax is separate from your income tax.
That's so true. Okay, and then what was I going to? Oh, so you said as far as deducting products, the only ones to deduct are like new products, and obviously, I'm assuming if people get things like that they use strictly for like sampling or giving away, those are deductible as well, right?
Correct. But you
Okay.
just need to make sure you have it well marked. So if you buy 3 lavender and you're using 1 lavender for personal use and 2 lavenders for sharing, just make sure you've marked that clearly on your invoice.
Okay.
If you want to make 2 separate orders where you do 1 order that's personal use and 1 order that is for your business, that's fine. If you only place 1 order a month, that's okay too. Just make sure you mark it on your invoice from doTERRA so that it's marked clearly what you're using for sharing purposes and what you're using for personal use.
And the same if you order like a new product. So say I just ordered, Passion Touch for the first time or whatever, then mark that one?
Correct. Because that one, we have to try it out, right? We can't sell it if we don't know about it and we're not smelling it and using it and be able to share with people.
Right. And then how do you categorize that? Because my accountant does it under advertising, under that category. But what do you?
Yeah, that is, there's a little bit of wiggle room in how a professional will categorize things, and it's okay to be a little bit different. You can put it under advertising. You can also put it just as an extra line item, for oil sharing or even into your supplies. But supplies is mainly your vials and the stuff that it takes to to make your products or your books or your classroom sheets if you're teaching from any of the sheets. But it's okay to categorize things. There's not a hard rule of where you put certain things.
Probably as long as you're
That's okay
consistent.
right, as long as you're consistent, and advertising is fine to put it there. It's also okay to put it as a single line item where you're sharing, because that's a common thing in MLMs.
Yeah. Yeah.
And the IRS does not automatically make it, if you're into an MLM, that it's an automatic audit. That's not true. There are random audits. IRS does do them no matter what. They will just grab returns and audit them. Being audited is not a huge deal if you've done everything right. But if you're being audited, it is better to find a professional who can deal with the auditor.
For sure.
So like if you come to, I work for H&R Block. If you come to H&R Block, we can help you with an audit. And we usually ask our clients not to go, that we will go and take care of it for them with the auditor.
Oh, that's nice.
But as long as you've got your receipts, there's usually no problem at all, because especially if you're using a professional, they know what you can deduct and they know what you cannot deduct.
Yeah. Yeah. That's good stuff.
But the biggest thing is keeping track of all of your expenses, because sometimes people don't even keep track of their expenses well enough and don't take all your deductions, and you are required to take all of your income and all of your deductions.
Yeah. Well, that's good. Okay, so we've got, Brooke, it looks like Brandy and Marilyn. So do any of you guys have any questions? I'll unmute you here for a second. Okay, you're all unmuted.
Okay, I have a question. This is Brooke.
Hi, Brooke.
Okay, so you were mentioning, sorry, I had screaming kids at the back, so I couldn't hear all of it. I was trying to hear really intently. But you guys talk about, what was it, like the Class C, or like that extra tax that's not your income tax? What is that? I'm not familiar with that at all.
Okay, a Schedule C is a form that where you put your personal business on, and it rolls over to your 1040. So a 1040 is your basic form for filing taxes, and that Schedule C, those numbers, that bottom line rolls over to the front of your 1040. When you have a Schedule C, it generates the form self-employment tax. That self-employment tax rolls over to the page 2 of your 1040 as a line item where it's an additional tax on top of your income tax. So self-employment, you have to pay both sides of your Social Security and Medicare tax, as opposed to wages where you only pay half. So you pay it both on the back page of your 1040, but you get an adjustment, which is like a credit for half that amount on the front to lower your income.
Okay.
But your income tax is separate from your self-employment tax.
Okay, how, like, is that a percentage? Like, what's usually the percentage or amount that tax is?
Well, the calculation basically is we're going to take the self-employment income, and we're going to multiply it by 92.35%. We take that number, we multiply it by 15.3% to get those informations. But if you look at you can always look at IRS forms and go just plug in self-employment tax, and it will show you the percentages. But it's going to be based on how much money you make, but it's always going to be the 15.3 and the 92.35, but it's also going to be the, if you make a certain amount over, which is higher, this is what we're wanting, right? We want the higher income. You'll have to pay an additional tax currently for Medicare, but that's for higher income.
Okay, so I have a question that ties in with this. So if I'm filing, me and my husband are filing our taxes together. He has a full-time job and makes, a good amount that puts us in a certain tax bracket. If we're filing jointly, does that mean that like all of our money is going to be is going to get that percentage for my small business, like that
So the percentage I was talking about strictly is attached to your self-employment income.
Okay,
now,
so it's only based on the money that I make, correct?
Yeah.
Okay, good.
That tax, yes. So let's say, and I'm using very round numbers, let's say you make a $10,000 profit on your business. Let's say your husband makes $75,000 in wages. So now your income is at $85,000. So your income tax is going to be based on the total income between you and your husband. And almost always it is much better to file a joint return because married filing joint is a lower tax rate than filing single or separate, okay? And you don't want to file married filing separate because that makes it so you can't deduct certain things. There are a few exceptions where filing separate is better tax-wise, but it's pretty rare. But any tax professional can figure that out for you and let you make the decision what's best for you and your family. But the self-employment tax, that tax is only on your self-employment income, and that gets added to your income tax.
So, and Brooke, you're only getting taxed on that money. It's like after your deductions, right, Marlene? I mean, it's after you take out.
Okay.
Correct.
So that's why you want to come up with as many deductions as possible, right? But obviously still being careful about it. But then, because then you're paying less of that self-employment tax. So, yeah.
And when you have a profit from your business, there's ways to put your money into a retirement program that's geared up for self-employment retirement. So that money is working for you as opposed to the government, and it lowers. So let's say you made $25,000 in your business and you put, maybe $10,000 away into retirement. Now you're only taxed on $15,000. So there's different things you can do that as you grow in your business, your tax professional can help guide you on ways to lower your taxable income and have that money working for you.
Does that help, Brooke?
Yes, no, that helps a lot. Okay. Yeah, that was not a tax I was even like familiar with or had ever heard of. So when you got to that part, I was like, wait, there's another tax? I have no idea what this is.
Yeah, right. And sometimes it stinks because like we just did our taxes, and like I had this little part-time side job that I had started doing, and it was self-employed, and it was $1,500. I had no deductions, but then I had to pay, it was almost half of that in self-employment tax. So sometimes it is kind of catches you by surprise and is a little fun.
Right. And people think also they have to file a separate tax return. And at our levels, we don't need to. They can be included into our regular taxes. People who file partnerships or corporate taxes, some people who are, up higher in the echelon chain with multi-level marketings or have other diversities of their business, they can
we just lost you for just a second. So after you said people who are up higher, they can.
So if someone chooses to file a partnership return, which could be a husband and wife, it could be any two individuals, because people think they need to file separately as far as having their business separate. If you choose to do that, that's a whole other return, and that return trickles down to your personal return.
Oh,
but
yeah.
We're talking to people who are doing like Blue Diamond and who own different parts of other businesses and other stuff like that. So really talk to a professional before you think you need to break that away. And when it comes to tax questions or tax stuff, if your best friend is a mechanic and says, hey, you can deduct this and that, maybe you might want to check into that, because sometimes your best friend who's not in the tax industry only hears rumors and thinks that's fact. So really double check. If you hire a professional, we're going to guide you. We're happy to answer questions. And you guys can always send me a Facebook message. I'm happy to answer tax questions to guide you the right way. Every tax return is different. It's like DNA. There's no two tax returns alike. So, if your sister's like, well, I have this and this and this, and I got this refund, and you go in and they're telling you you owe, and you're like, well, my sister said, because it's all the time. This happens all the time. But if they're not in the tax industry, they don't really know.
So true.
And it's very important that if you have questions, to ask a professional to guide you the right way. Because the goal of a tax professional is not only to teach you about your tax returns and make sure you take every advantage that you have coming to you as far as taxes go, but to teach you and guide you on what to do with your money and how to make your money work better for you.
So good. That's so true.
That's why we're professionals.
Yep.
But it's not something that, people can do their own taxes, and I'm not saying that nobody can, but you don't always know what you don't know when it comes to businesses.
So true, which is why for me it's worth every penny.
Yeah.
So I have one more question regarding
Sure.
tracking mileage.
Yes.
Okay, so I use and a tracker on my phone that's just called it's Mile IQ, and so every time I drive somewhere, it logs all my drives, and then I just go through and I either swipe whether it was a business related one or personal.
Right.
But I'm a very busy mom. I haven't gone through and been writing in oh, well, this time I was going to meet with, this was a one-on-one, this was dropping off samples, this was doing this. I've been tracking it, but I haven't, I wasn't writing down exactly what I was doing. Is that does that mean all that I've been tracking is no longer useful, or?
Not necessarily, but if you can put it, because what the IRS is going to say, well, if that's business, what were you doing with it? What were you doing on that business? If you can put in, even if you make yourself, some of the tracker programs can give you an option to put a little code in. So it's good for you. So you know what that code means, but you know if this was a one-on-one, you know if this was an education class, you know if this was convention. But delineating out what it was you were doing is better for the mileage loss. Yeah.
So if I were to get audited, they may end up dismissing all those miles?
They could, but typically you can back it out and remember kind of what you were doing, because you can, certain miles to, if you went to an education class, or, if you do something pretty regularly, like if you're going to the post office to mail samples, that kind of stuff, you can kind of back that out and figure that out, or match it up with something else that you've done. Like if you drove to convention, that, oh, at this time in September, this is where I was at. So that's the mileage for that.
Just use your calendar too. That usually helps.
Well, I was, but the calendar program that I use on my phone, when it only tracks for 2 months back.
Oh.
So I can't go to last July and see what I was doing when I was driving around.
And it isn't synced to your Gmail calendar or anything?
No. I stopped using the Google Calendar one because it kept deleting my appointments.
Oh, man.
I stopped using it.
Shoot. Because that's what I rely on to remember, to jog my memory to where I was. I look at my calendar and I'm like, oh, yeah, that's where we went.
Yeah.
So.
And sometimes the old-fashioned way of just having a little pocket calendar or something in your car or in your purse or even in your home, just, the day, you can just write mail one-on-one with whoever. And then you can match your mileage to that if you need to.
Oh, okay.
But there's different mileage different apps for different mileage plans, so you can kind of look at what works for you. But swiping it, at least to know that it's business versus personal, that will help you, and you'll be able to trigger what.
Yeah.
What you were doing.
I remember I started doing that at the beginning of this year because I realized after last year, I was like, oh, I need something to track my miles. I'm not doing anything. And I was trying to just write it down, and I wasn't tracking. Like I said, I'm a crazy busy mom. I have toddlers, so I just wasn't writing it down very often, and then I would forget, and I was missing out on all these miles. And so that's why I switched to doing this, because it's so much easier.
It is, and at least you do have a record, so that is helpful. If you're ever audited, they could say, I want more specific detail of where you were, and then you can say, well, I have to pull my calendar and I'll match it up. So definitely, you're still doing the right thing, because yeah, all of us, we're busy parents and doing a gazillion things, and so you need to do what is best for you and how your brain thinks. There's not just one way to keep track of mileage. You know, I have people that will write on a receipt, on a gas receipt, how many miles they went, or someone who just writes it in a notebook, or someone who writes it on a calendar. It really depends. It's how your brain thinks and how you organize. And sometimes when you're busy, that's why I said sometimes I tell people, especially if they're traveling to, like, a good example is traveling to convention, if they're driving, have them have envelopes, food, meals, mileage, you know, whatever, so they can just stuff it in an envelope and deal with it later if that's how their brain thinks.
Yeah.
Because I've had people come in with garbage bags. I've had people come in with boxes. I've had people come in with cookie jars. I've had people come in with their file cabinets. So who just come in and, you know, sometimes it can be overwhelming when they just have this huge container full of receipts and you're like, really? And so part of my job is I teach them how to get things organized for their brain so that it's better for the tax professional. Because when we look at that, we're like, are you kidding? Oh my God. We can help you
horrible.
still help you.
Yeah, do you charge an extra fee for that?
Oh, for sure.
I do. If it's a lot, I mean, if it's only a few receipts, I don't charge. But if it's the ones I've had in huge containers or the garbage bags, yes, I charge for that. And then I teach them, now I'm going to teach you how you can do this better. Even if it's envelopes, if it's like kind, it makes it so much easier than just everything thrown in a bag and I have to figure out what it is you're trying to deduct and what a receipt is. Because sometimes it's not always clear.
Right.
So definitely it's how your brain works to get organized. And if it means, you know, once a week, once a month, you take an hour and you plug stuff into QuickBooks, then great. It depends on how you think, but there's always a way to organize it so that it's easier during tax time, so it's not quite so overwhelming.
Gotcha. Okay.
That's good. All right. I wanted to see if Brandy or Marilyn had any questions. I'll unmute. I just unmuted both of you. Do either of you have a question for Marlene?
Yeah, this is Marilyn. I do. So if you use TurboTax, will it automatically do all that transferring of the Social Security tax and stuff onto the onto the 1040?
Yes, it will.
So it's all
that. If you're filing a Schedule C on TurboTax, it will put your self-employment tax in the right places. It will roll over, and it will put your mileage in the proper place.
Okay. So
yeah,
I thought it did before.
Yeah.
Another question. Okay, so I am faulty for not separating out what I use for, because I don't have a specific stash of product that I use versus a specific stash that I sample. I mean, if people need if I give out samples, I just go to my stash.
Okay.
So when I do my orders once a month or twice or whatever I do, I haven't said this percentage is for me and this percentage. Now maybe I should change that this year, but for last year I did not do that. So how will I go about determining? Should I take a random percentage or what?
Well, so do you write down who you give samples to so you can follow up with them?
Yeah.
Like,
I do.
You say, okay, so, and if you write down what you gave samples of, and you know if you use the small vials or the larger vials, you can actually figure out there's usually, 10 drops or 15 drops or 20 drops in this one, and that's usually what I give out as a sample, and you can just add them up as far as.
Oh my gosh.
Well,
that's good.
It's not as much as you think. So let's say you gave out 20 drops. of lavender to 3 people, that's 60 drops. But if we have that sheet that you can print out of what the cost is by the drop,
Yeah.
so you can figure that out and then know what you've used for sampling from your personal.
Okay.
Does that make sense?
No, it totally makes
sense.
It's
just going to require a little bit more math. So
yeah.
if you have any children in the home that are at the point where they can do a lot of multiplying, that's a great math lesson.
Yeah, I know. It's just me and my dog.
Okay.
Grandkids, get the grandkids over, Marilyn.
Yeah.
So that's
But
interesting because Marlene, I have had an accountant tell me in the past too, say just take a percentage of your best guess of what you think it is, so that you don't have to.
Yeah, that's what I've done the last 2 years.
Yeah, it only comes into play if you're auditing, but if you've kept track of everyone you gave a sample to and what you gave them a sample of, you can kind of figure out how much you've done.
Yeah, which is true. Yeah.
So you can't say 25% or 30%, but you have to be able to kind of, you have to think in, if I'm audited, can I back that up?
Yeah. Yeah.
So this is one of the phrases is, can I argue this to the IRS? If I have to go to bat for you, am I going to be able to argue this with you? And that's how I discern what people can take and not take, because they say, I don't like you enough to go to jail for you. So I will not allow you to deduct this because you can't, but you can deduct this.
Yeah. Okay. All right. Well, so then one other thing, if you put money into an IRA, can you only put a certain percent of what your 1099 is, say from doTERRA?
So an IRA is totally separate from business. So a traditional IRA is $5,000 for anyone 50 and under. If you're over 50, you can play catch up and do 65 or 6,600, I think, this year. But that's separate. So when I'm talking about a self-employment retirement program, that is a program you have to set up separately with your bank or financial advisor, and then yes, there is a percentage that you're locked into that you can't go over depending on what your profit is. You have to have a profit in order to put money into a self-employment retirement program. Yeah.
Okay.
But an IRA is always a great option to help lower your taxable income as well. That affects your taxes right now and becomes taxable when you pull it out. If you do a Roth, it does not go on your taxes at all. There's no benefit to your taxes in that year that you put money into a Roth. But when you pull it out, when you retire, it is tax-free income.
Right. Okay.
Those are associated with business.
So if you put money into an IRA before April 15th, will it count for last year?
Yes, but you have to make sure you delineate it out. So when you go to your bank or financial advisor and say, I want to put money into my IRA for last year, which you can do because it may benefit you enough where you end up actually partially funding your IRA, you just have to delineate it out that it's for the prior year, and that can be done.
Okay, but you can only put money into an IRA if you're employed. Is that correct?
Well, even if you're self-employed, you can still do an IRA. It just is not a self-employment retirement program. That is separate. So a traditional IRA is, anybody can put money into, and that lowers your income.
The fact that I'm doing this Schedule C shows I'm self-employed, so to speak, even though I don't make a great income. But I could put some money I have that I've already paid taxes on, and put it into an IRA to count for last year.
What that's going to do is lower your income. So let's say you have $50,000 of income, and you put $5,000 into a traditional IRA. Now your taxable income is starting at $45,000.
Right. So that's the advantage.
Right. So that's where advantage of a traditional IRA comes into play. Is that its job is to lower your income. You get the tax benefit now, but you pay tax later.
when you take it out. Even though but you only pay tax though, is it correct that you only pay tax on the money you've made from it, the interest, right?
No, because the reason you have to pay tax on all of it is because you're taking a tax benefit now. So if you put $5,000 into a traditional IRA, you're lowering your income by $5,000. So you're not paying tax.
Even though I've already paid taxes on that money?
No, you haven't.
Yes, but you haven't. If you take it as a deduction, because it's lowering your income, so you're not paying taxes on that money, it's going into the traditional retirement program.
Okay.
So
if
because
it came
you're taking
from
a tax benefit now.
Okay. So if it came from a paycheck, say your paycheck is $5,000.
Mhm.
So, but your gross paycheck was $7,500. But you net 5,000, and out of that 5,000, you take 2,000 and put it into an IRA. So in essence, you've paid taxes on it because they deducted taxes.
Yes, you have
from your
paid taxes there, but now you're gonna take those taxes away because you're gonna take a tax benefit.
Okay. So it's kind of like
Yeah.
taking them. Take that helps. I mean, understand. So you kind of negated that you paid for it already.
Right.
Right. But you're taking
Yeah,
an
okay.
additional tax benefit to basically, because you're getting a credit now.
Yeah. So it's probably a good plan if you have a tax year you've made a lot on or something and you want to lower it for
Right.
that tax year.
And one of the things that can be done is you can even, whether you see a professional or you do your own taxes, you can actually play with it and put in, if I put in a traditional IRA of this amount, how will it affect my bottom line?
Yeah.
Because
Okay.
depending on your income level, you may get a saver's credit. It may increase like earned income credit or something like that, where it actually partially funds your traditional IRA. So there are definitely some benefits for people to put money into a traditional and let that money work for them. Because it becomes a tax benefit now.
Yeah.
But you
And can you
just
typically,
remember,
but don't you have to start pulling money out of that IRA when you're 70?
Yes.
So, okay, so I am 70. So if I put money in this year, I'm going to have to just pull it right back out.
No, I think you can leave it in because if you have other IRAs that have to come out, do you have other IRAs?
I don't. So this would be a new IRA. We do other things.
I want you to send me are you on Facebook?
Uh-huh.
I want you to send me a private message. I want to look up you can put money in for quite a while, but I want to double check the age and get that answer to you.
Okay. So what, you want me to just send me my name?
Yeah, send me your name and a message of the traditional IRA age. I'm going to check that out because I want to make sure you get the right answer, because that is something that does change, and I want to make sure I'm giving you the right answer instead of the wrong one.
Okay, awesome. We were thinking about adding to an IRA to have as just kind of a quick cash thing, something for an emergency, because we have fine investments. We're fine with that. But just something like where it's not in the bank,
Right.
That if we needed to, not as much for a retirement income as opposed to a emergency income. If that makes sense.
Mhm. Well, traditional IRAs and they're just more readily available. You can get to them fast.
Yeah, that would be the reason, because income wise and invest, we're fine. We don't need it, except if we have an emergency, Okay, well, I'll message you when we get off, when I can get to my computer.
Perfect.
Marlene, so awesome.
Thank you so much.
taxes do not have to be scary and overwhelming. So, if we can take some of the fear out for people filing taxes, especially business taxes, then we're doing good. But it doesn't have to be scary and overwhelming.
I can get rid of the scary part, but no, I don't know about the overwhelming part.
I was just gonna say the same thing.
It's all the paper. It's all the receipts and paper. I hate them with a passion.
Right, and you do have to keep all of that stuff, and you need to keep your tax returns for several years, at least at minimum 7 years. I tell people, I encourage them to keep all of their tax returns actually forever. It's really not taking up much room, but business tax, the IRS, you can go back 3 years, but the IRS, if they find concern or an issue, they can go back not only 10 years, but they can go back forever.
Gosh.
Yeah.
That's very overwhelming.
They just don't have enough to do, I guess, if they're going to go back that long.
So, well, that's people who, where there's issues, where they have made some, choices. So, but just remember to keep your receipts. And if you're not sure if you can deduct something, ask a professional. Don't ask, your neighbor who, maybe is a nurse or a garbage man or something else, because that's not their industry. That's not their profession. And unfortunately, sometimes even if you call the IRS, you may get a different answer every time you call. But that's an option as well. But, most tax agencies will answer your questions, even if you're not their client. At least professional ones will typically say, no, you can do this or you can't do that.
It's so true, though. You do get so many different answers because, I've worked with a few different accountants. I've gotten different answers on things. Brenna has a friend who works in the IRS. We ask him questions. We get different answers all around. So it comes down to doing the best you can. Right, Marilyn?
I think so, yeah.
Yeah.
I mean, I probably underclaim than overclaim because I don't want to get in trouble.
Well, and you won't get in trouble. If it's legitimately a business deduction, you will not get in trouble. If you can back it up with receipts, you're golden.
Yeah.
But, it's got to be what's for the industry. So if you are a doTERRA representative, and of course we're deducting some of the oils, and we're deducting our new products, and we're classroom stuff. But if you're going to try and deduct a chainsaw, that doesn't work because that's not something that's needed for the industry, right? But people will try and, well, I've got to cut down these bushes so when people come over, my house looks presentable.
Oh, gosh.
Yeah, that's precedent. But I've seen it all. So, you just, is it normal for the industry? Is it something that I'm using for my business? And sometimes when you're using something, 50-50, you can use it 50-50. Like a laptop. Some people have one laptop for personal, and some people have a laptop that's just for business.
Oh, we lost her again.
For it.
Oh, there she is.
Same with this.
And then when you talk about how much that is, you only use you just only deduct the half then.
Well, you can put in, it depends on where you're at in your tax return. If it's something you have to depreciate, you can put the whole amount in, let's say $1,000, and then it will ask you what percentage, and you can put in 50%, and it will calc it out for you by itself.
Okay.
Whether you use TurboTax, H&R Block Online, or go to a professional. And, H&R Block and other tax offices, I can do pretty much everything a CPA can do. I have the same background. You do not necessarily have to go to a CPA to have your taxes done. But you do, if you want to see a professional, just ask for a senior tax prep person who's had some experience. Don't get a newbie.
Yeah, okay.
Because you're past that stage when you're having a Schedule C. But sometimes the receptionist doesn't always know or doesn't ask the right questions. So if you use a professional, just ask, can I please have a senior tax professional?
That's so true. We got hosed in that a few years ago. Somebody referred us to a new accountant company, and man, he came back and told us we owed like $5,000 or something in taxes, and we're like, this is so weird, because we figured we should have come out even. And so we hired another accountant who knew what he was doing, and we ended up getting money back because he hadn't asked us all the questions. Like, he hadn't deducted everything that we had available to deduct. So anyway, but he just didn't know what he was doing.
And you can interview a tax professional. I've been interviewed several times before a client has hired me.
Oh,
And
I did
I'm
interview him, and then he was, but then he charged me for it.
He charged you for the interview?
Yeah.
Oh, most of us don't.
Oh, geez.
I know, he was so needless to say, he didn't get any more business from me.
Yeah. That's
So
good.
so when you are using either TurboTax or H&R Block Online, do those programs, can you be confident that those programs have asked all the right questions?
Well, they'll ask basic questions, but they're not going to ask, like, there are things I know about the industry because I'm in it, but they don't, the program, you don't know what you don't know. And that's the one bad part about using online programs is you don't know necessarily what you can and can't deduct, but a software system can't ask those questions. It'll ask basic questions like mileage and, do you have an office and home, but it doesn't ask you certain things that you can deduct that you didn't know. Because like I said earlier, taxes are like DNA. Everyone's different. So a software program cannot be built to ask all the right questions. And that's there in part the biggest part of the difference with a professional versus online.
Yeah. Yeah.
For me, it's worth it. I love it because I feel confident in knowing that, he's got us covered, and then I don't have to worry if I get audited. I know he's going to be there in our corner with us.
Yeah. Yeah.
But if you have basic taxes, the online programs, and you have some knowledge of taxes, they work just fine, and they will walk you through some of the basic deductions. So, but if you start doing self-employment, retirement, and that kind of stuff, I wouldn't mess necessarily with.
Yeah, no, I'm not.
Yeah,
I'm not that.
But
I'm kind of basic.
I'm not pushing one type of tax over another as far as online versus professional. If you can do it online, great. But when you get to a certain point, a professional is really a better idea because we can know what to ask. We can help you if you're audited. And just because you're audited doesn't mean there was a mistake done by the tax professional or you. Audits just happen.
Yeah, that's so true.
The IRS does a certain percentage of random audits, and that's just the luck of the draw.
Yeah.
So, but you just have to be able to back up. So every time you're doing a receipt, you're like, can I make sure you have the receipt, and can I back it up? If you lose a receipt, I go and tell people, well, did you get it? Did you pay with it with a credit card or a debit card? Because then you can trace it.
Yeah. Yeah.
And if you pay cash for it, then you need to keep the receipt because you can't trace that.
Yeah, I love that. I have one card I use just for business for that purpose, so that it's my backup plan. Yeah.
Well,
sometimes just stuff happens.
It tells where all those charges are.
Right.
It's easy to pull those charges out.
Yeah.
Exactly.
Everything to enrollment tools or whatever. It's easy to pull all that out.
Exactly.
Now, would those, if you don't have a receipt, would a bank statement where it shows on this date this purchase?
Yeah, that won't work because actually, typically, you can go back to the company and say, "This is the if they keep the receipts, can we get a receipt?" But if it says Aroma Tools on your bank statement, well, the average person, if they're not in the oil industry, isn't going to go shopping at Aroma Tools.
So
right?
true.
Right.
So we can argue that going, well, Aroma Tools only deals with the oil industry. So I didn't go get Band-Aids there. So
right, exactly.
that usually will work for an auditor. Sometimes they want a receipt, but like Aroma Tools, I think sometimes I've called and going, can you forward me that invoice, please? And they've done that. So
Yeah.
most companies will have a way to track it that they can give you another receipt if you need to.
Yeah. Okay.
It's just when you're paying cash. You pay cash for something.
Yeah.
I'm a proponent of being debt free, and that's part of what I teach. But most definitely, if you pay for cash, if you lose that receipt, you have nothing to back it up with.
Right. Right. Well, you can. I think you can use a card as long as you not use it to go into debt. You know.
Correct. Or even a debit card, you know, that comes right out of your account. It's showing exactly where you purchase things from.
Sure. Yeah.
Yeah. So that's perfect. But if anybody has any questions, don't hesitate to send me a Facebook message or jump on the call tonight, because it will be a little different as far as if different questions are asked or that kind of thing.
Yeah, for sure. I know. So Marlene, thank you so much. I can't believe we've been on here an hour, so we need to end. Let everybody get back to their day. But this was great because we had so many questions, which is awesome. That's what I was hoping for.